Hey everyone, thanks for tuning in this fine Saturday. In this video, we're going to talk about cannabis stocks. I'm Charting Man Dan with the Chart Guys. Going to do a quick intro about my experience trading this sector. Then we're going to talk a bit about the fundamentals. Going to go into more heavily the technicals as the most important aspect of this stream. And going to touch on a couple of the psychedelic names as a bit of an aside. And then I'll answer any Q&A that you all have reading the YouTube comments. So real quick, a little bit about me. I've been trading for 13 years at this point. The first stock I ever bought was Cannabis penny stock, MJNA. I've been trading this sector for 13 years, and it is one of my passions. It's why I got interested in stocks. I was interested in industrial hemp. I was either going to go to learn how to grow the plant in Canada, played around with the penny stocks, and it worked out. And if you want any, insight into those experiences, just look at the monthly charts for MJNA, CBIS, PHOT. From 2010 to 2014, this sector has had the boom and bust cycle time and time and time again. And we're certainly having the bust aspect of this cycle over the past couple of years. And I made every mistake that you can possibly make when I was learning back in those years. And that has helped me do well in the past, 6 years of my trading. Essentially, I would say the first 6 years of my trading, a lot of learning. I lucked out into some of those bull markets. California had the first vote for legalization, Prop 19. It failed, but we would, get the runs up. We get 1,000% up, 80% pullback. So it's nothing new for this sector. And a lot of people think, this sector started with the Canadian names like Cannabis, but nope, it goes back to these U.S. penny stocks. And again, the boom and bust cycle is very common. So let's talk a little bit about the fundamentals, and then we'll get to the charts. So real quickly, this past week, we saw the Health and Human Services recommend that cannabis goes down to Schedule 3. And why that would be so significant for the sector is, number one, federal change. Any federal change would be welcomed, because what we had is the bull run up from this sector. Last that we saw it was market euphoria, and euphoria with Biden being elected and a blue Senate and House, and things are going to change. And then the market slowly realized, oh my gosh, nothing is changing. It's still extremely slow. The roots of the system are ingrained. It doesn't matter who's in charge. And it just led to a bunch of despair, and for good reason, because things are so slow. And this past recommendation, if we were to get Schedule 3 instead of Schedule 1, that would open up the doors of a lot of changes. Again, number one, the ball rolling of federal changes. But a big thing, I'm not going to go very in-depth into the fundamentals because, again, I'm a technical full-time trader. I trade in both directions, but certainly make a lot more money long, and that's the direction I prefer. But there will be times that I short to hedge long swing positions that I'm not going to sell and things like that. But what 280E would do, Google that. Google what 280E is. If we go to Schedule 3, 280E gets essentially repealed, and that would have some significant tax benefits to the sector. Right now, the sector has big tax disadvantages because of how it's all laid out with the legality and all that. And technically, these companies are breaking federal law. Let's just say it black and white. Yes, they're making money. Yes, the federal government is turning a blind eye, but they're breaking federal law right now. And that is holding back a lot of big money, a lot of investors and things like that. So I believe it was Green Thumb laid out, if 280E were repealed, our bottom line would be impacted by like $100 million. So it is very significant. They can't have tax write-offs. So that's one change that we're looking for. It would also potentially open up the door to uplisting. And for those of you that traded the cannabis names, CGC and TLRY, remember that when that party got started for the bulls, the uplisting was very significant. The dollar volume poured in. There were a lot more players now trading those names, and that would be a significant catalyst to essentially look to front run, where, if we get the headlines that that's going to happen, the uplisting is going to happen, we get in our positions, and then, as market makers have to establish their positions, it leads to buying pressure, and of course any ETFs and things like that. So we're going to talk a lot about the specific ways to play this sector when we get to the charts here in just a moment. But essentially the short-term catalyst, rescheduling. And again, I think of, we have a bubble of the cannabis stock sector, whether it's on Twitter or people we interact with. And so everybody knows about, rescheduling possibly happening and what SAFE Act is, but zoom out. Think about the general population. Because if we're going to see a run where we make hundreds of percent and money grows on trees and we lock in our profit along the way, we're going to have to see the general population jump on here. And, SAFE doesn't do that. None of my friends know anything about SAFE unless they're interested in this sector. So rescheduling is a headline that's going to hit everything. It'll hit all publications, and the people that aren't in the stock market world will have the thought, maybe it's time to get into cannabis stocks. And that's the kind of catalyst that we need. And you'll find that media coverage generally will lag price, where the more these names run, the more CNBC and Reddit and all these other places are going to be talking about them. So keep that in mind as well. There's many different aspects of what leads to a bull market, and Schedule 3 would be a major catalyst because it would permeate outside of the bubble. Again, if SAFE happens, and that's another short-term catalyst that we're going to be watching, the Senate comes back, I believe, in a week or so, and so there's possibility that SAFE starts to get discussed again or gets put on the table. But again, just keep in mind, yes, SAFE would be notable for those of us paying attention, but outside the bubble, SAFE isn't a sexy headline. We want sexy headlines to get everybody involved. And so that, we just got to keep that in mind as well. So a couple things. Let's make my face small. So here's our charts. But first things first, I want to give a couple of shout outs to some Twitter follows, because I've been away for the past couple of days, away from the internet, and just, jumping back in and wanting to follow along and see what's catching up here. On Twitter, A Barnes 2201, he's a new follow for me, but he, I came across 2 posts that gave me information, so that's enough for a follow. So according to Kim Rivers, who's the CEO of Trulieve, TCNNF, the NASDAQ is currently going through the regulatory policy to check if Schedule 3 would allow for uplisting. And the other information is keep an eye on the Senate Banking Committee calendar over the next week. If Safe Banking gets a markup, it'll appear on the calendar as an executive session. So that would be just add to the momentum that we currently have from the recommendation. And again, one thing that I will do in these videos as we talk about the sector is I'm going to play devil's advocate. I'm not a cheerleader. I'm not, no shade to the MSO gang. That's not what I'm about. I'm about making profit. And that's my number one goal as a trader. That's why I'm here clicking buttons. I hope for everybody that needs it as medicine and things like that in the real world that we get these changes for the real world implications. But the reason I'm clicking buttons is to make profit. So just keep in mind that, again, I'm not going to be a cheerleader. And one of the things that, I'll say here is in this moment, still nothing has changed, right? What has changed is we got a recommendation that increases the probability that we're going to get some rescheduling. But again, nothing has changed. And the DEA has to have this rescheduling decision. And the DEA has been making hypocritical decisions for a decade. And so I do believe why I'm interested in this sector is it will change eventually. But there have been so many times where, whether it's the DEA or somebody else just does something that, you look at their decision, you say, we know that they are not acting on data. They're not acting impartially. They are acting with a significant bias, wanting to protect their budgets and things like that. So just be aware that, I'm going to be talking about the red flags and the green flags as well. One other thing to note is, roughly speaking, the DEA will have 90 days to now act on the recommendation from the HHS, but that's not a hard and fast deadline. It's a bit gray, loosey-goosey kind of deal, but we're looking for something into the end of the year to potentially get a decision there. One more thing before we get to the charts is what did I want to say? Oh, the election. So for me, election years, again, going back to my 13 years of experience, election years lead to bullish action. And that was a gimme. Like heading into the fall of an election year, whether it's individual states have votes coming or, whatever it is, that's a time to be looking bullish in this sector. And so that's a year away at this point. We know the election is a year from now. And so something I keep in the back of my mind is, okay, if I'm the Biden administration and I want to coast on some headlines into the election, I want to save those headlines, not now. I want to save them for literally 10 months from now. So that's something to keep in mind as well. But I will, if it were going to be the perfect storm of a reversal for bulls right now, it would be if it was, September 2024, we would have a lot of momentum going into the election. But it's still a year away. So we have to keep that in mind as well. So the ways to play this sector, MSOS is the ETF. Definitely have to be paying attention, keeping an eye on it, because that's where the dollar volume is. We know these names are still traded on the OTC. Personally, let me just get out of the way here. So, for transparency, my current positions, I've got some MSOS, I've got some TSNDF, and then once we get to the psychedelic names, I've got some CMPS and some MNMD. And I am having a longer term mindset, which means, as we know, these names are very volatile. If I'm day trading Tesla, my stop loss is going to trigger on a day trade 1% move or less. That's the wiggle room that I give. But these names are moving 20% plus in both directions. So my position size has to be much smaller to allow for that kind of move without my account making insane fluctuations. And so, my goal in this space is to profit and go aggressive when the stars align. The stars are not aligning. They're aligning enough for me to, establish some positions and look for the longer term bottom to be in. I feel the longer term bottom is in. Volume often marks climaxes, whether it's a top or a bottom. And the volume this past week is massive. That's the most important takeaway for me this past week, is the dollar volume that showed up. And I talked about it on Monday. Before any of this happened, I made a post where I said, I'm really surprised that we're still seeing $10 million a day traded in MSOS. With the bears in complete control, with the summer lull when there's often a lack of trading activity, I would expect it to be much less than that. And then, of course, the headlines come out, and not the kind of thing, I could look in advance and say something's coming. But in hindsight, it's like, okay, it makes a little bit more sense now. But the dollar volume, essentially my mindset right now is, if this is not a cycle low, this sector is in a ton of trouble. So I'm treating it as if this is the cycle low. And if I'm wrong, I will stop out and take a loss on these swing positions. But the implications, bigger picture, would be very negative if this is not the bottom. And just to look at the weekly time frame here for MSOS, one thing I often do is look back and say, okay, we got to the highest level that we've seen all year in 2023, which means, simple statement, anybody that has shorted this sector this year and did not take profit on the way down is in the red. And so that's obviously a good thing if you're a bull when you want to see the tide shift. We also have to keep in mind there's a ton of bag holders in this sector, and there's no shame in being a bag holder. We've all done it. If you are interested, we just did a webinar with myself and some of the Chart Guys team. If you Google Chart Guys bag holding, it's an hour or so, 45-minute webinar. I suggest watching it because, again, if you are bag holding, there's so many lessons to learn. I was a bag holder in my early days, and I learned those lessons and didn't repeat them, and that allowed for me to excel as a trader later in my career. So we can always put a positive spin on things. Maybe it's the worst financial decision you've ever made, but you can learn from it and never repeat these mistakes again. So first, highest level this year, but you go back and there are bag holders. What that means is overhead supply. There are people that are so sick with this sector and what they've had to watch their account do for 2 years. There's somebody out there right now with an MSOS average of $16, and they are going to sell when they get back to break even. So that's where some of the overhead supply comes from. So we have to keep that in mind, because we know the most powerful breakouts and the most significant bullish opportunity is blue sky breakouts, all-time highs. Why is that? It's price discovery. There's no bag holders. There's no resistance. It allows for, that's why crypto exploded. One of the reasons is because when you hit blue sky, it can get really significant really fast. But for MSOS to get blue sky, all-time highs, we need to go 800%, 750%. So that's not on the table right now, and it's probably not on the table anytime soon, in my opinion. And so again, we just have to keep in mind, we want things to go up. We want to all be high-fiving and making money together, but we're going to keep it real. And we're going to be watching price action and volume and fundamentals, of course, to help us determine what most likely scenarios are. I don't predict anything with technical analysis. That's not what trading and technical analysis is. That's a common misconception. What we do is try and determine the most likely scenarios and position ourselves in those probabilities. And we're going to be wrong a bunch. And so when we're wrong, we stop out and have small losses. And when we're right, we want to have big wins. And that's the name of the game for trading. And so that is my approach. So MSOS, the volume. It's not the highest dollar volume week. I do rough estimations here. So 67 million, we'll call it, rough average of $6 per share traded this week. So we'll call it $400 million of dollar volume this past week. It's massive. It's the most shares ever traded in a week. But if you're talking dollar volume, you go back to the all-time high, and that was 9 million at, let's call it, 50 for easy math. That's $450 million traded. So, and that marks the top. Again, volume climaxes mark tops and bottoms. This has to be a volume climax marking the bottom or major red flags. So again, I'm treating it as if it is. So we're going to get information the next time we consolidate on the daily time frame. And we're going to go into the individual names here in just a bit, some of them, and then we're going to talk about the Canadian names a bit, and then again, as I mentioned, the psychedelics. But one thing to note about the ETF is to be keeping an eye on, and here's another Twitter follow. So Jungle Java 1 on Twitter. Here we go. So Jungle Java 1 on Twitter is worth following because she is keeping tabs on the holdings of the ETF. And there's information that we act on this that help us profit. We have veteran traders in the Chart Guys community, veteran cannabis traders who've been trading this sector with me for the last 5+ years, ever since the Canadian run. And, there are day trades that we take based on some of this information. And so what you want to see is inflows, and you want to see large cash positions, because when MSOS has a large cash position, they use that cash to buy the underlying companies. And these underlying companies are so thinly traded that, buying $1 million of one of these companies moves the needle. And there are patterns that we find, again, we don't know when MSOS is going to buy, or we don't know what names they're going to buy. But we recognize patterns, and we can position ourselves in some decent probability scenarios for day trades based on this information. So not going to go too in-depth into that, but that's what we as full-time traders look at as, again, just a little piece of the puzzle, a little clue that can help tilt the probabilities in our favor a little bit as traders. So right now, heading into this coming week, MSOS has $9.3 million of cash, which is pretty solid. And we're going to continue to keep an eye on that. We want to keep seeing inflows coming in. And, one thing you don't want to do is choose one company and go all in. And that's your company. And some people do that. And I would suggest against that just because, again, the age-old diversification, at least pick a few. I mean, if your portfolio's majority cannabis, you're not diversified. If you're in one cannabis company, you're in as least diversified as possible. You're just going for a Hail Mary. And I hope it works out for you, but I would suggest spreading it out. Some people don't like MSOS and the way it's managed. Fine, that's perfectly fine. But if you're going with individual companies, pick a few. And don't fall in love with the story. Keep in mind that everything you hear out of a CEO's mouth, a CEO is the #1 salesman for a stock. Salesman or saleswoman. That's their job. They are going to tell you the best case scenario for everything, and they're going to gloss over all the red flags. So whenever I read something from a CEO, I view it as I'm reading it from a salesman. They are trying to sell me shares. And just keep that in mind. It's my hard-earned money, and it's going to take more than what a CEO says. A lot of people, that's where you get in trouble. Again, I did this as well. A lot of people get in trouble because they fall in love with the story, they fall in love with the CEO and what they say, and they take, their only sources of information are what the CEO says and what the press releases say. That's #1 and #2 salesmen. Like, that's their primary outlet for trying to sell shares. So we have to, if you're invested in a company, you should be looking, what people will do is they'll find their group on Twitter or iHub, and they're all cheerleading together. Rah, rah, here we go. Let's talk about the good things. Let's feel warm and fuzzy. If you're an investor, you should be lifting turning stones to find every red flag that you possibly can. Show me everything wrong with this stock so I can write it down and keep an eye on it, because if anything changes towards these red flags, I'm going to take my money back because it's my hard-earned money and I'm not riding this ship into the ground. So just keep that in mind as how you approach trading, because again, we all make the same mistakes and a lot of people have made those mistakes in this sector, a lot of you watching this video. And again, there's no shame in it. Every professional has made these mistakes. Every professional trader. It's just how we respond to them and how we recover from them. So let's get to the charts and the technicals. MSOS first, and then I'll show you a trick for how to compare. Is your individual company that you're watching stronger or weaker? Does it have relative strength compared to sector peers or relative weakness? So the key zone right now, and when you have something that's illiquid, and these names are illiquid, trading on the OTC, and we've got the ETF here, which is higher listed, but it's resistance and support zones. It's not a clear level. So I go back to MSOS, and I go back to January. Look at all this price action. This is bears. Just imagine, when I look at a chart, even if I want it to go up, I imagine I'm a bear. Like, what would I be thinking if I'm short in this position? And so this is the bears defending, just rejecting the price from this resistance. There's a lot of price action resistance between 725 and 736. That is a key zone that we're watching from here. And on Friday, you can look back and say, well, we broke it. Well, yeah, we did. But how long did we break it for? We broke it for 3 minutes. 2 minutes, whatever. A couple minutes, we got over that level and we dropped right back down hard. And we pulled back like 8% from that resistance. This is bears continuing to defend that resistance. There is a resistance zone that is a line in the sand that the bears are going to do everything they can to reject the price from. The most bullish thing that can happen this week from here is when we pull back on the daily, which is potentially shaping up. If we break 665 on Monday, daily consolidation, I should say Tuesday, we got the holiday Monday, daily consolidation is underway. And we can keep an eye. I think Canadian markets are open, so we can keep an eye. I don't think anything major is going to happen, but we can check in on things Monday. But when daily consolidation happens, we watch retracement size to help us determine probabilities. And retracement size on TradingView is Fibonacci retracements, Alt-F, and I measure from the low of this move to the high. And now I want to see, what is our retracement? When we retrace 382 or less, it favors continuation. When we retrace 50% or more, it favors a long drawn out tightening range, what I call an equilibrium. So what we see on this next daily consolidation is going to be very telling. If we reject from this zone and pull back to $6, that's a bit of a red flag. So we're going to have to keep an eye on that. And we're going to talk about hedging. One of the things that I'll do, if I know I'm not going to sell my swing MSOS position, which is my, bottom is in position, then I don't want to sit through a 30% drawdown, which we very easily could see. From the high here, we can pull back, maybe not 30%, but we can pull back 15% fairly easily. I don't like watching those gains be given back. So one thing that I do, and again, it's because I'm a full-time trader, so if you're not, then there's different strategies. You don't want to be over trading, but I will short in a different account. And, one mindset here would be, all right, well, we reject from this resistance zone. I enter a short. And then I hold that short, and if we get back above 744, I stop out, and I take a small loss in that short, and then my swing position keeps gaining me profits. And if we pull back 15%, it's protecting me. Maybe hedge is the wrong word because I'm using the same instrument, but it protects my account from that big 15% pullback if I have some short. So another thing that I'm going to be doing is potentially looking towards, we'll talk about this in just a bit, but I can be long MSOS and I can short CGC. And CGC we know has a lot more trouble in terms of fundamentally and technically. So maybe I want to short Canadian names and be long US names and then just play that kind of game. But that takes a lot of active management. So again, stay in your lane to a certain degree, with your experience. Some of you watching this video have been trading with me for the last 6 years and full time. And some of you are, have a full-time job and a family, and, you buy and sell maybe once every 5 months. So just keep in mind that the audience of who I'm speaking to here, a bunch of very different people. So we have to keep that in mind. So if you're looking long from here and you don't have a position and you want to add, you're looking to enter on daily consolidation. And, someone giving a really loose leash is going to use the all-time low as a stop. Another way to do it is entering on consolidation, and then once we set a daily high or low, using that level as your stop. So that if we confirm, if we start the fade again, we know the fade, right? The pump and fade. What makes me think this time is different is because the pump didn't last one day. We did get higher highs 3 days in a row. And again, the dollar volume and the inflows were very significant. But you better believe I'm going to protect against the fade, because the one thing bears have on their side, or have had on their side, is time. And by that I mean we get a headline, and even this one, HHS, it's a nice headline. It's a nice short squeeze. But is anything going to come out of this next week or this next month? Probably not. Maybe. It's a possibility. Shorts definitely are less comfortable than they have been after this headline, but we might not hear anything from the DEA for 3 months or 8 months. And so if that's the case, and if, we don't have any new headline catalyst like SAFE in the Senate, we can fade. Another factor is we have to watch the broader market. We have to watch the S&P 500. That's sentiment. If fear starts to show itself in the S&P 500, these high risk, high reward sectors will be sold off the hardest. The reason we ran so hard in 2021 is because we were in absolute bull market euphoria in the S&P 500. And investors and traders were throwing their money at the wall at anything that would stick. And then we had a bear market in 2022. And the pullback in cannabis was exacerbated, was magnified by broader market fear. And so there's a lot of pieces of this puzzle we need to be watching if we're going to be completely tuned in to what's going on here. And right now, I do the broader market daily videos daily, and we're at a pretty critical juncture in September where we're either going to be a monthly bull flag to test all-time highs in the markets, or we're going to set a lower high and tighten up with a long-term tightening range a good bit, if not most of 2024. And September is going to give us a lot of information as to which of those two paths is more likely. So I will cover the broader market. I'm not going to cover cannabis every single day in the daily videos. As long as it's hot and volatile, I will. But the S&P 500 and the NASDAQ, I'm going to be covering every market day. So one thing that the bulls want to see, if we get to hourly oversold conditions, which is the hourly RSI dropping under 30 from here, the bulls need to see a daily high or low form from there. Brad's telling me that Canada is closed on Monday. Appreciate that. So nothing going on Monday. So if we get to hourly oversold, the strongest markets, when crypto was going nuts, hourly oversold would mark a longer term high or low, and then we just continue. The best case scenario, if we head to hourly oversold, it's got to mark the daily high or low. If it doesn't, if we see an hourly oversold bounce and then roll over into further consolidation, that's going to be the first big red flag for me. So I'm watching for those details this coming week. With the current setup, I can see there's resistance at 710, where we topped out Friday afternoon, and of course 740 for the high of Friday. Those are the two most important short-term resistances. And as far as support, if we break 665, daily consolidation is underway, and that's when we start to measure the daily retracement. As far as if we get continuation, I'll be talking about it. If the bulls confirm a daily uptrend, and that's the most important aspect from this, because all you got to do is look at Canada, ACB. How many short squeezes has ACB seen in the last couple of years? A lot. And what we will often see is a huge move up, straight off of weakness, and then no daily trend change confirming. This is just a higher low every single day. We go up 36%. What we have to see for follow through is daily higher lows and higher highs, just a stair-step uptrend. And what you will see often is the big spikes, and then it's just a reset the bears jump back in. It's supply and demand. Keep it simple. So charts go up when demand is exceeding supply of shares. Charts go down when supply is exceeding demand. And what happens here is you get a mini short squeeze that forces the shorts to cover. Then you reach a period where everybody that's going to buy on this headline has bought. Every short that's going to cover on this headline has covered. And that's when we start the pullback. And that's when supply starts outweighing demand again. So that's going to be critical here. And we can see here, just as an example, how much retracement did we see? Well, we tried to set a quick little higher low and failed, and then we gave it all back. So I'm open to MSOS doing that again this coming week, which is why it's a possibility. And I'm going to be watching very closely to see if, with clues, if that's happening or not. But again, we really need, for me, let's just make up some numbers here. Let's say I think probability that this is a cycle low is 78%. If we confirm a daily uptrend from here, if we pull back and then see a continuation move and break 744, then my probability goes from 78% to 89%. And that's how I work as a trader. I'm just constantly, I'm not always laying out made up probabilities in my brain, but there's pieces of the puzzle that move the probability needle. And so if I'm at 78% that the cycle low is in, if we retrace 50%, I'm going to drop that down to 58% sure that the cycle low is in. So if we get over 744, the next level, that's when things open up a bit. I'm going to be looking at the next major level up, in the $9. So, previous support, 870, little resistance, low $9. But again, I'll be giving daily updates if that happens. It's critical that this consolidation is minimal to show us that the demand is still there, that cash on the sidelines that missed this bounce and didn't want to chase are buying the consolidation to keep the demand of shares outweighing supply. That's critical. All right. So now let's go into some, I ranked these names. I'm only going to look at these names at the moment. These are the 5 that I watch. These are their rankings from strongest to weakest, in my opinion. And TSNDF, we have to say that its volume and liquidity is junk. As a full-time trader, this violates my rules. I have a rule where I don't trade anything that is under $5 million a day average volume. And I'm breaking that rule just because of the sector, but my position size is reflecting that. It's a much smaller position size than I would do on, my Tesla swing position. But what we can say is, here's a trick. So if you're wanting to compare individual names, compare your ticker divided by MSOS. So TSNDF divided by MSOS, we can see that if this chart's in an uptrend, we are stronger than the ETF. The individual name is stronger than the ETF. And I can say that, it shifted a bit these past couple days, but earlier this week, we hit the strongest that this name has been compared to the ETF in its history ever. The strongest it's ever been. And it hit the highest level in over a year, or all year, 2023. So now we're looking at 250 as a major resistance level from here, and we would be approaching 52-week highs if we were to break that level. And one of the reasons, why is this name stronger? It did uplist on to the TSX in Canada to potentially open up a little bit more liquidity, a little bit more exposure to, whether institutions want to be involved. We saw some ETFs buying this name. And again, it's so thinly traded that even just a little bit of buying pressure from these ETFs leads to some significant percentage gains. So I don't love the liquidity. I don't love the dollar volume, but in terms of the best positioned compared to the ETF, this is one of them. The other one, GTBIF, divided by MSOS. Go to the weekly chart. All right. Back in June, we hit the strongest we've ever been compared to the ETF. And sometimes that just means we're not dropping as hard. If GTBIF trades sideways and MSOS drops, this chart's going to go up because we're gaining relative strength against the ETF. So this past week, we are testing the strongest it has ever been compared to the ETF. So it's up there as well as one of the strongest. And then we, I'm not going to do every single name, but we look at Cresco, CRLBF divided by MSOS, it this week, or 2 weeks ago, hit the weakest it's ever been compared to the ETF. And they had the deal fall through and things like that. So there's some reasons for it. But again, if you're wanting to compare individual names, just divide it by MSOS. See, are we in an uptrend or a downtrend? How close are we to the strongest it's ever been? How close are we to the weakest it's ever been? So if I'm just ranking them here and now, I'd say, GTBIF and TSNDF are both at the top, Curaleaf behind them, and then TCNNF and CRLBF are on the weaker side. And that may change if Florida, we know, Trulieve has a big presence in Florida. If they vote on recreational, that'll change very quickly. But just talking about the here and now, that is how they are ranked, technically speaking, on these charts. As far as the individual names, as I mentioned, it's going to be the same thing. TSNDF broke the low of Thursday on Friday. For me, that means daily consolidation is underway. So again, same thing. I'm watching the retracement size. I'm watching, do we get to hourly oversold? Does that mark a daily high or low, showing us a strong uptrend? So these are things that I'm watching. Every concept that I just went over for MSOS applies to these individual names as well. But we need a daily high or low soon, and we need to get back over 223 to keep the pressure on bears. The one thing that this sector, bears have been really good at is when they gain control, they keep it. And so they, the bears get sucker punched every now and again in the mouth. The analogy that I give is, bears are in complete control. This headline drops. The bulls sucker punch the bears. The bears get they're stunned. What just happened? The price runs fast and hard. And then the bears snap out of it and they're ready to fight. And they win. They then win now that they're ready to square up. And so what we need to see is that change. We need to see shorts punished. Because shorts piled in on Friday into some of these names, without a doubt. Just watching the price action, we know that. And so if we see the higher high, we can then say anybody that shorted the initial headline pop is now underwater. And them being forced to buy back at the ask, ideally, continues to add buying pressure. So if we're going to see shorts punished, we've got to see the continued uptrend. Because every time you get the higher high, it's a new wave of short-term bears being forced to buy back, ideally higher, to help push the price higher. GTBIF, highest level of the year. Good sign. As far as price level resistance from here, and this is what we call an inside bar. If the inside bar breaks bear, daily consolidation underway. We must then see continuation. 10 psychological, nice round number that we pulled back from. From there, I'm looking at 1040 as a little resistance level. But honestly, I'm looking towards what does consolidation look like first, because just with how Friday traded, probabilities, are telling us don't be surprised if daily consolidation shapes up sooner rather than later here, as we ran real fast, real hard, and we know consolidation has to happen. So inside bar, 924 support. If 924 breaks, daily consolidation underway. And then we gauge what does that consolidation look like? How much volume is behind it? We want to see declining volume on consolidation, increasing volume for the bulls. Curaleaf did not see the highest level. So this is why Curaleaf's in the middle. We didn't see the highest level in 2023. 427 is still resistance back from the high in July. If we're going to see the highest level this year, we need to see the bulls up, over at 450. That's another 25% from where we stand. So it's a bit weaker for that reason. There's still resistance there. The bears are going to do what they can to defend 427. And then here's this resistance zone back here. So 427 to 440 is the resistance zone that lines up with the MSOS 725 to 736 resistance zone. And so, again, just imagine a battlefield and you got trenches, World War I, trenches on both sides. This is the line in the sand that the trenches are battling over. And if the price is under it, the bears are winning. And if the price is over it, the bulls are winning. So this is a critical resistance zone to be watching from here. If we break the low of Friday on Monday, daily consolidation underway, watching that retracement size. TCNNF. If we were going to be the highest prices this year, we would need to be up in the upper $7 range. That's, 35% from where we stand. So we got $6. This is, $5.98 is resistance. I'll just round. We got 6 psychological resistance. We pulled back from 601 on Friday. We could see it was previously support, the $6 range, rejection, rejection. If we break the low of Friday on Monday, daily consolidation underway. And we measure what's the retracement size? Is it healthy consolidation? Can we get over the line in the sand? $6 is now the line in the sand there. Cresco, we're not even back to the July high. If we're going to get to the high of the year, we need another, again, 25, 30%. Whereas resistance, 190 to 195. That's the line in this. Well, I mean, it's a wide range. I'd say 190 to, the low $2 range. There's a lot of, look at all the price action. Fail, 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 bounce, fail, bounce, fail, bounce, fail. So what bears do is they get trained. Say, well, every time we hit $2, we pull back significantly. I'm just going to short when we get to $2. And they're going to keep doing it as long as it works. And then one time it won't work. And they'll be forced to buy back higher and add fuel to the buying pressure. Is that this time? That remains to be seen. But we can mark these very critical trench lines in the sand for all these individual names. So now onto the Canadian names. So in the past, the Canadian names would often benefit more percentage-wise from US-based news than US companies. And the reason for that is liquidity. They're traded on the higher exchanges. And just, using me, I'm one little fish in this sea. And if I want to market buy $100,000 of TLRY, I'll get filled real quick in doing so. Maybe a penny of slippage. If I want to market buy $100,000 of any of these OTC US names, there's slippage. It takes a while for them to fill. It's not the same game. And so anybody that's trading with any meaningful capital is trading on the higher exchanges, which is why we want to see these US names uplist. The reason we want to see them uplist is so that the larger players will come on over and play in these names, because there are a bunch of people that have strict rules where they will not trade these OTC names. And maybe they'll trade MSOS, but it's not the same. So the people would dive into these liquid, high volume. I mean, you look at the dollar volume, and it's definitely been changing, but TLRY, dollar volume on Thursday, 89 million times, $2.80, let's say. So we're talking $250 million traded. This is very rough math. $250 million traded on Thursday. And what did, Green Thumb do on Thursday? Green Thumb did under $20 million. So it's literally like 8% of the dollar volume on Green Thumb versus Tilray. Because liquidity, market makers, access. So I need to catch my breath. I'm used to doing a 20-minute video and then being done, but bear with me. All right. So TLRY, it's well off of its lows. We're up 100% from its lows. And we're testing the 308 resistance, and we technically broke it. We're still struggling right around that area. After 308, we've got 313 and 359 as the next major levels. We are in a weekly uptrend. That is one thing that none of these US names, well, I won't say none. I believe TerraSend does have a weekly uptrend. No, not a good one. But MSOS, we're not in a weekly uptrend. We came off the all-time lows. We've got to see a bull move up. We top out. We pull back for a couple weeks. We see continuation. So Tilray is ahead of the game in that sense, where we had 100% move off the lows. We pulled back and got, 30% pullback or whatever it was. And now we're back up at the high. And so again, the psychology here is anybody that shorted this pop is now back underwater, and they're forced to buy and help this move continue. So as far as a long-term trend, the Tilray weekly uptrend is a lot more developed than these US names. And so that's just something to note. And then we're going to have to change the monthly trend. We're going to top out, and then we're going to have to pull back for a month or two and then confirm the monthly uptrend. It's a long road. When you're in a downtrend on every time frame, monthly, weekly, daily, it takes a really long time to then change all the trends, so you're then in an uptrend on all time frames. And we know the best place a bull wants to be is in an uptrend on all time frames. And so again, just, okay, the election's 14 months away. Maybe we see a bounce for another month or two, but there will be a time where we pull back for multiple months. And just think psychologically, we know this has to happen to confirm a monthly uptrend. But we also know that everybody's going to say, uh-oh, here we go again. We're heading back to the lows. It's over. And that's going to happen again as well as we change that monthly trend. And so, you look at that on other individual names. Tesla, just a random example, but so we bounce from 100 to 200, similar example, big bounce. Oh man, bottom's in. And then you pull back from 200 to 150. You get back 25, 30%. Oh geez, bears are back in control. The sentiment shifts. The sentiment reflects price action. And so we know if we're going to change a monthly uptrend, there's going to be red months to help that be established. And then so everybody that said, oh man, we've been, big red month, we're heading back to the lows. Nope, it's just the stair step. We've got to do this on the longer term time frames if we're going to enter a long-term uptrend. So just keep that in mind looking down the road. There will come a time where TLRY consolidates on the monthly for a couple months and then tries to confirm the first monthly uptrend since all-time highs. That's not anywhere on the horizon, but looking out months in advance, it's important to know psychologically what's going to be going on. What's social media sentiment going to be like as these names try and shape up monthly trend changes? It's going to be bearish. It's going to be, here we go again. I'm not talking about monthly trend changes for USMJ names. It's not even on the table. Let's start with the daily, then we'll do it on the weekly, hopefully, but not on the table. Just wanted a bit of a tangent there, but not relevant right now. I'll talk about it when it matters in a month or two. CGC, got to be aware of dilution and things like that with CGC. Again, if you want to know more, Google TheChartGuys dilution. I have a video. I used ACB as an example in that video. And then from making that video, CGC started to follow the storyline perfectly of what I'm talking about by a death spiral of dilution. But it pops with the sector. There's correlations percentage-wise, from Wednesday and Thursday, 63% in 2 days. That's a short squeeze. But bears also at this point from the high, bears made a quick 18%. And so the question is CGC going to fade back down or can it confirm an uptrend and follow through? I personally am not focused on, I generally will focus on the Canadian names for trading for liquidity reasons, what I already talked about. But that's pretty much, I'm only going to be looking, sometimes I'll long TLRY for these moves, but I'm going to be looking short the Canadian names. And I'm watching for a time where the USMJ names outperform, and we can do the same thing. MSOS divided by TLRY. And we could say TLRY has been a better place to be than MSOS for a long time, but not the last 2 weeks. So because we're going up on this chart, this means that the last 2 weeks, MSOS has been stronger than TLRY. What I'm watching for is, do the US names start to gain relative strength against Canadian names? If that's the case, that means I want to focus long US, and if I'm going to short and hedge or protect, then I want to short Canadian names. And in the past, it's been the opposite. In the past, it's been jump on the Canadian names for the pop and short the USMJ names when the pop tops. So I'm watching to see if that's going to shift, if the relationship between Canadian and US names is going to shift at all. And watching this chart is going to help answer that question. And so what the bulls really want to see is MSOS divided by TLRY, head back to the recent highs up here. If we go to CGC, let's go to MSOS divided by CGC, we can see that we've been stronger than CGC for months and months and months. CGC has been a train wreck. And so it's a big difference. So TLRY divided by CGC, we know TLRY is way stronger than CGC. So again, what I want to identify when I'm looking at a sector is who are the leaders and who are the weakest. And in a setup that dictates looking long, I look to the leaders. And in a setup that dictates looking short, I look at the weaker names. And so I'm always comparing individual names to each other. So CGC, same deal. Inside bar, if it breaks bear, daily consolidation is underway. It won't take much to give back 50% of this move very quickly. I mean, we already almost did. We gave back 48% of this pop with the pullback on Friday. So what would, if MSOS were doing the same thing as CGC right now from the last 3 days, that means MSOS would be trading at 620 right now if it had retraced the same amount. So CGC clearly still weaker at this moment. Now on to the psychedelic names. So psychedelic names, definitely worth paying attention to. There's fewer bag holders. We haven't had the major hype run that will eventually come to this sector. And I'm confident, again, you just look at the social changes, the laws, we got the trials for different medicines or treatments of depression and alcoholism and all that. And the psychedelic sector has not had its heyday yet. And it's very thinly traded as well. So I know that when money pours in, I'm going to be, again, my mindset is lock in profit into euphoria. I did it with Canadian cannabis. I did it with crypto twice, 2017, 2021. I always sold before the top. I'm not nailing tops and bottoms. I'm taking my profit into the top. People tell me I'm an idiot. What are you doing? It's only going to go up. Buy and hold is the way to go. And then euphoria tops out and I'm not holding the bag. And I'm going to do that in the psychedelic space. There will be a headline surge, whatever the catalyst is, and there will be a couple hundreds of % gains. And then I will lock in profit. I'm not going to go long. I'm not going to hold for 10 years. To be able to pick the company that's going to survive and be a leader over 10 years is a very low probability. Give me the money now that's in my account. I'm going to take it and run. But it's not setting up right now. But if cannabis continues to see confidence, that will seep out into the other highest risk, highest reward sector in markets that has legal hurdles. And the legal hurdles are slowly changing. And that is psychedelics. So CMPS is the leader in psychedelics to be watching in terms of market cap and dollar volume. And this is a pattern that is absolutely worth watching because we have been tightening up for a year. And this is a potential bottoming pattern. And we can keep tightening up for another month, but we're going to break before the end of the year and we're going to see a significant volume and volatility spike. And we've seen in the past, there's been significant opportunities that granted have been short-lived, but there's a 70% move in 5 weeks. Here's a couple month move for 216%. Yeah, we gave it all back, which is why you got to lock in profit along the way. Use partial positions. So many newer traders, it's all or nothing. But you can put yourself in a good psychological state. Let's say I sell a third into this hype run. Let's just say cannabis. I sold a third on Friday. If it keeps running next week, great. I'm still making profit. I have more net worth than I had the day before. If it pulls back, great. I sold a third. I've got cash. I can rebuy cheaper if I want to. And that's a way that you can put a positive spin on whatever happens. Now, you can also choose to put a negative spin on whatever happens. And this is where psychology is so important in this trading game. Because it will be, you'll drag yourself down. I could sell a third on Friday. If it keeps going up, oh, I'm an idiot. I sold a third. I should have held. It pulls back. Oh, I'm an idiot. I should have sold more. Those are two of the exact same scenarios. The difference is your choice in how you approach it with your mindset. You gotta break it up and take some profits into euphoria and reload on consolidation. Anyways, that's a whole different other topic. We got lots of psychological videos on our YouTube channel talking about all that stuff. But CMPS, let's just go to a different example. XPEV, Chinese EV name. What does that have to do? Nothing, except for the technical setup. We had a euphoria run, in 2020, 2021, all-time highs. We gave back 90 whatever percent. Sound familiar? How did we bottom? With a sideways, many-month, long-term range. And when we broke bull, we saw a quick 100% move. The resistance was 11 and 13. And look at this week here where we're finally getting over resistance. We go up 60% that week. That's a long-term sideways bottom from a massive despair run drop of 90%. MSOS, how much have we dropped? Or I guess we're talking CMPS. Same concepts, but. So CMPS from 61, dropping down 89%. That's a sideways bottoming pattern. Does this mean it's going to break bull? No, but I can look at the probabilities and say, I've seen this before. This is an accumulation kind of pattern. This is the scales. So what happens in a downtrend? The scales, old-fashioned scale. Supply is outweighing demand. We're dropping. What's happening the last year? The scales are doing this. So they're going from supply exceedingly outweighing demand, and then they're doing this. And are the scales going to then reach a balance and flip where demand starts exceeding supply and we go up? That's what we're watching for. This price pattern to me is just the scales doing this. We're getting real balanced. There's fair value. Supply and demand is pretty tame. Granted, it's still significant percentage moves, but comparatively, it's very tame to what it has been. And this is going to break and spike volume and volatility. And so we can mark all these resistance zones, and we can mark our support zones. I can look at this past week. Bears are defending the 980s. Look at this resistance, 989, 996, and then Thursday we topped out 987. There's a short-term line in the sand. There's longer-term lines in the sand above it, but this is the short-term line in the sand battleground for this coming week. Got to get over. I mean, we just got to turn $10 into support is what has to happen here. And I've got to reread the details. There was this spike here was news of private placement, investment, getting a big cash infusion to be able to, further studies and all that. But I believe the shares that were given for the cash are able to be sold over at an execution price, I think in the 990s. So I think once you get over there, I don't know if time's a factor. Again, I have to go back and read the filing. But I believe we're topping out right under where the conversion can take place. And then those shares can be sold, which adds supply. That's a factor of something to be aware of. But really all I care about is how does this tightening weekly range break? And it's entirely possible that we fail this resistance of 1092 and set a lower high and then pull back and tighten up all September as well. That's possible. And then we look for a break into the fall. But keep an eye on it. MNMD has had a significant move off its lows. It's up 100% plus from the fear lows as well. We just set a new support level on the weekly time frame. This is now a must-hold 372. Our resistance zone is back at $5. The bears defended a double top at 5, and we rolled over. Then we had a falling wedge that we were keeping an eye on. That's a bullish reversal pattern showing bear exhaustion. Broke bull on Thursday. Thanks to cannabis. That volume on MNMD is because of the cannabis hype. But there's still a lot of work to be done here. I need to see these bulls. Again, if we're talking retracement sizes, just like we watched the bear consolidation retracement, there's bounce retracement. So I want to see these bulls bounce over 50% of what we just gave back. And then we're going to have to eventually confirm a weekly uptrend. So it's a long road ahead. Monthly time frame, long road ahead. But keep an eye on these sectors because they're thinly traded enough and it's sexy headlines, psychedelics, any kind of legal changes, any kind of breakthrough, any kind of patent, any kind of big biotech company buying out a smaller psychedelic company. Remember when Constellation jumped into Canopy and what that did for the sector the next month? Massive hype and euphoria. So just keep an eye on it because there will be a hype run here. It's just a question of when, whether it's this year, whether it's 3 years, I have no idea, but I'm watching for it. Jeez. I'm losing my throat. It's an hour straight of rambling. All right. Now I'm watching. Thanks for the likes. 64. We can do a little better than that. Appreciate the likes and the shares. Honestly, when I'm making content, the analytics dictate what I talk about. If I make a video and it gets the least amount of views and likes in, the last few weeks, I'm not talking about that subject anymore. If, I made a tweet about cannabis earlier this week and it was one of the most retweeted, liked, and impressions that I've had on a tweet in months. So that tells me keep making cannabis content. And so it's worth my time on a Saturday to sit down, share information with all of you because of that. So just be aware that every like and retweet and whatever that you do impacts decision making for content creators. And obviously content creators expand the reach of others who may be interested in these sectors. So I'm going to do, I didn't plan on talking for an hour. I just hit ramble mode. So I'm going to read a little bit of this chat room. I'm not going to do individual ticker requests. What about VFF and Cron and VRNOF? I mean, everything that I just said applies to them, right? You can do the measurement now. You know how to do it. How strong or weak are they compared to MSOS? What's the retracement size look like on daily consolidation? Where is the resistance? So practice some of that yourself. And, I'll check in on other names perhaps the next time around. But just going to do a quick recap here. Appreciate you all. SAFE will increase headlines on top of rescheduling news. Yes, it would be a double whammy for sure. Now would be the best time. The stage is set. It's a platter of SAFE would be perfect right now, because if you get, SAFE on its own, none of my friends hear about it. But if you get rescheduling recommendation and then SAFE, more, headlines are going to come out regarding it. It's the same thing. What I just said about my analytics, it's the same thing with CNBC. And it's the same thing with, Business Insider. If prices are going up, if people are clicking the articles, if people are sharing the articles, that's what tells them to keep putting out that kind of content. It's a positive feedback loop. Do I follow unusual options activity? Personally, no. I do not. It's definitely something to keep an eye on. I'm not saying it's useless. It's just not one of my strategies. There were calls before the HHS news, but you can also go back and look at the last year, and there were plenty of times where there were unusual calls that didn't mean anything. Wall Street bet crowd. It's not the same setup. Yes, there is the possibility that Wall Street bets jumping all over this leads to more short squeeze. Absolutely. But the mechanics of the underlying of GameStop were different in terms of, the amount of naked shorting, the amount of hype and euphoria that it got. I won't say it's impossible, but don't be wishing or hoping for or looking for 1,000% move here. I don't think it's the same setup at all. I don't think there's nearly the same kind of massive amount. Again, it's liquidity. There's a lot of shorts in cannabis over the last couple of years, but it's not billions of dollars of shorts. And that's because they're traded on the OTC. Maybe the amount of shorts in the Canadian names are more significant, but any headlines, any hype helps, but we're not going to be here hoping for, a GameStop move in the sector. Thanks, Rav, for posting some links. Historically, September and October are some of the worst months for the S&P 500. That may be the case, yes, but also, I guess it's not an election year, but cannabis sector likes the fall. Usually the fall is good for the cannabis sector. Granted, I'm not really looking at that to be the case this year. It definitely could be because of this, but I don't think there's enough historical data to put any kind of confidence in probabilities in that regard. You have to determine everything in advance. So someone just asked CGC, should we add? Well, number one, CGC is the weakest name out there. Doesn't mean it can't go up with everything else, but it's one of the weakest names right now. So make note of that. Do I want to double down in the weakest name, or do I want to play the stronger name? Diversify. You have to lay out your game plans in advance. If you are not writing down your game plans, I'm going to add at this level. I'm going to take profit at this level. All you're doing is reacting emotionally to price levels. And that is how professional traders like myself make money. Because those of you that do not establish game plans react emotionally. And I know how to trade opposite of what a normal human emotional reaction is to price, which is why when things are absolutely crushed, I'm looking long, and when things are euphoric, I'm selling. Meanwhile, people who don't know how to play this game are looking long at the top and exiting at the bottom. And so do not let yourself be susceptible to your emotions. Write your game plan in advance. The only way that we as professional traders succeed is because we rewire our brains to counteract what our emotions tell us we should be doing. So if you are not doing that, you're part of the herd, and you are part of the reason that professional traders can make money in a career trading. Don't be one of them. Write out your game plans in advance so that when the time comes and the emotions are high, you look down at your piece of paper. That's what I said I'm going to do. I'm going to do it. Boom. All right. Again, we've got 9,900 videos on our YouTube channel. We've been making videos for 8.5 years at this point. So if you like what you hear, go to our YouTube channel, all this free information, and go through the playlists. If what I just talked about emotionally and psychologically in the markets, interests you, you go to our YouTube channel. You ignore the dumb thumbnail. I didn't make that thumbnail. Don't blame me. And then you go to Market Psychology and Trading Lifestyle, avoiding bag holding, AMAs with Professional Trader, Ask Me Anything. You go to Lessons and More. You go to, Chart Guys, correlations. I just talked a lot about correlations, relative strength, relative weakness, understanding market correlation. Chart Guys, priced in. What does priced in mean? Canadian cannabis was priced in. I sold the top in Canadian cannabis because I understood the concept of priced in. Watch this video. You will understand the concept of priced in a lot more than you do now. You could literally spend the next however many hours going through these resources and taking a crash course to accelerate your understanding of how markets work. Go back and watch Chart Guys TLRY. Back when we were real cautious about talking about the top. What are these ads? That's new. I forget which one it was. Anyways, there's one out there that's got like 10,000 plus views, and it was talking about the short squeeze in TLRY and what to expect, and it played out really well from there. It's a great learning experience. Trying to find the right name here. I'll post it in the comments of this video. I'll find it. Anyways, I'm done. It's Saturday. Go outside. Enjoy the last bit of summer. I appreciate you watching. Follow us on Twitter. I'll keep putting out some updates as we go. I'll definitely do this again if we get to 100 likes. And I hope you have a great rest of your weekend.